Hey everyone, Chris here, July 11th, 2024 with an update to market stats. And this is the video where I update probabilities of success, right? Stocks and bonds and their historic probability of success. And I have data going back to 1950, so for stocks and 1975 for bonds. So it's the beginning of those periods through June 30th of 2024. So let's run some disclaimers and then get back into it. All right, so again, what I do is I have a spreadsheet here that I've created that I've downloaded information from the internet on the S&P 500 index for stocks and the Bloomber Aggregate Bond Index for bonds, right? Those are broad market proxies for what I'm doing here. And they have daily values. I take the month-end values and I run a spreadsheet to say that, hey, what's happened for the past 1 year, what's happened for the past 3 years, 20 years, etc. And then I summarize the information here. So with no further ado, let me share my screen with you. And here we are. So again, there's data within these sheets, right, that comes to a summary table. And since January of 1950 to June of 2024, there have been 894 one-month periods, right? So that's how many months there have been over that 73.5-year period. And then for 1 year, there's been 882 one-year periods. And again, a one-year period is January 1950 to January 51, April of 1963 to April of 64. A 3-year period could be March of 1974 to March of 1977. You follow me all throughout. So there have been 774 10-year periods, 294 rolling 50-year periods, etc. And here's the historic historic stats. This is historically what's happened, and past performance is no guarantee of future results. Is it indicative? Is it statistically significant? Is it probable? Well, you have to draw your own conclusion ultimately. But I do use these numbers to help people make decisions. So since January of 1950, month over month, the S&P has historically had a 60.29 success rate. That means it increased month over month 60.29% of the time. So 6 out of 10 times. And for 1 year, 73, almost 74% of the time. For 2 years, 82. For 3 years, 84. For 5 years, a little bit less than 3 years. It's interesting. For 10 years, 92% of the time. And for 20 years, 100% of the time. Over no 20-year period was the S&P on was its value lower than it was 20 years past. And this doesn't even account for dividends. This is just the S&P price level. It doesn't account for any reinvestment of dividends. So perhaps these numbers are even understated. If you include dividends. However, this is the data I have, and this is what I go with for these videos. So very interesting. Not a big change from when I did this back in January. So for bonds, we have data since December of 1975. Again, that's through Bloomberg U.S. Aggregate Bond Index. This is the data I can find from their site. There have been 583 one-month periods with a 66% chance of success. 86% chance of success for 1 year, 92 for 2, 94 for 3, 99 for 5. For 10 years now, bonds historically on this price level index have not been less over a 10-year period. And so what I did is I put the summary of the difference between stocks and bonds here just to help highlight things. Let's give a color to this row. Just something for the sake of drawing the eye and comparing these two rows. So again, for stocks, 1 month. I see what I did there. We have to stay on this. We have to stay on this page. Now, for stocks, a 60% chance of success every 1 month. Bonds, 65. Say for 1 year, 73 stocks, 86 bonds. For 3 years, 84 stocks, 94 bonds. And what this is, it just shows you bonds have a higher probability of positive returns over these measuring periods. So they did have a higher probability of positive results. Now, their average success was not as high and the results were not as high, but the dispersion of results was a lot less, and that gives people comfort with bonds in that, I don't want to say, I guess they're more predictable in that they're less volatile. They're equally as unpredictable as that we don't know how much they're going to go up or how much they might go down. The range of outcomes is typically less with bonds. So if you can mitigate losses that way, you also mitigate your gains. But if you're investing to not lose, that's why people use bonds as a more conservative approach. So you can see the average for 10 years, stocks have increased by 120% almost historically over rolling 10-year periods, where bonds, well, look at that, the bond average is 109. 109 for 10 years. I mean, for a 10% difference almost, why stomach stocks for, say, only a 10% difference? That's quite interesting. So, well, I guess the reason for it is the maximum over 10 years for stocks has been 370%, and the maximum for bonds 293. So, yeah, I guess for 80%, you play the stock game. But wow, on average, that's interesting. The average results are not much better for stocks. And then also you say, well, listen, that's from, in absolute terms, greater than zero. But what about current bond rates? And so if we look at current 10-year bond rates, they're about 4.28. So I've plugged in 4.28 to my spreadsheet, and I've given a summary screen here that, well, look, Chris, if I can get 4.28 for 10 years on a bond right now, on a U.S. government bond, how many times now do stocks beat that 10-year bond rate? And so back to it, where for 10 years, relative to zero, stocks have been higher than a zero rate of return 92% of the time. They've only been greater than 4.28 75% of the time. So 3 out of 4 years, a stock returns 3 out of 4 times over 10-year period. Stock returns are greater. So 1 out of 4, they're not greater than 4.28. I mean, it might give, depending upon how high bond rate goes, it might give you some reason to consider some 10-year bonds at this point. If you're a conservative investor, to only win 3 out of 4 times in stocks may not be good enough for you. 75% chance. You liken it to an operation or a procedure. 75% chance of success seems low in the medical world, but it's maybe decent in the investment world, right? Gaming chances, it's good, but for life and death, it's certainly not. And so for 5 years, stocks have only been better than 4.28 70% of the time. You can get 4.28 on a 5-year treasury. And so you see. So this is just a quick update of stocks versus bonds. I hope that I really obsess about these things, and I'm quite fascinated. Always have to make decisions. I try to dumb it down to a coin toss, stocks or bonds, but it's not always that easy. But in its purest form, those are the two most prevalent investments out there and easiest to buy, stocks and bonds, and in these large index approaches. So that's it. That's it for Market Stats this time. See you back here the next time I do this.